right, today we got a juicy one, guys and gals. Today we're going to be talking about two real-world asset cryptocurrencies that I think are on the precipice of blowing up. And we're going to even go into the momentum trading strategy that I'm getting into this because I'm not quite ready to buy more in some of these cases. Both of these cryptos I actually hold for the long term, and I'll explain to you why I'm holding them. But I'm going to also explain when I'm looking to start momentum trading these because this is so important. And if you don't know about momentum trading, here's the video on momentum trading. You can go check it out right now if you want to watch that video first. It's a short video on how you can actually use the momentum of the markets to time this perfectly on entry and exit. So let's talk a little bit about FRAX here. So FRAX is a stable coin DApp. So essentially they've created lots of different things for stable coins. They've got a USD stable coin. They've got a FRAX staked ETH stable coin where you're making like up to probably like 15 to 20% per year in Ethereum, which is really, really cool. We're not going to talk too much about that. Their real world asset use case of FRAX has just gotten super duper duper juicy. And so they've actually come out with what's called Staked FRAX. And Staked FRAX is essentially a place where you're able to deposit your crypto, which is a stable coin, and using kind of a proxy, FRAX actually puts the money that they've got in those stable coins into short-dated United States Treasury bills, Federal Reserve overnight repurchase or repo program agreements, USD deposits at Federal Reserve Bank master accounts, and select shares of money market mutual funds. Okay, and so in that, FRAX is now participating in a real world asset, which is so cool. This is where we're starting to blend the real world assets with all the things that we're doing in DeFi. Okay, now you can go through all of the docs here. I just wanted to bring it to your attention that what they're doing and how they're like really starting to make some big money, and they make a little cut off all of this stuff. But take a look at where this gets interesting. Okay, look at this APY right now, current estimated annual percentage yield if you have staked FRAX, 15.98%. Now, I actually think you're beating inflation with this, despite the fact that these jokers at the United States are saying that, you know, inflation is only 3.some%. That's horseshit. All right. It's probably closer to like 8% or 5% per year. It's really, really high. In past years, way more than 8% when they said it was 8%, because like, how do you get to that point when, you know, your grocery bill has doubled in the last 4 years? And so this is something that is definitely competing or outpacing inflation. And I think that it's a good place to put your crypto so that you can actually have a safe supply. Now, the cool thing about FRAX, never been exploited. They've got a very, very strong dev pool. They're just creating stuff that is next level. I use FRAX for so much stuff. I actually participated in the private sale and was super glad that I did. It was one of the best investments that I ever made in my entire life. I'm a big subscriber to them. These guys just keep innovating. They've come up with their own blockchain. That's what we've got this, like, I got some airdrop from them. I've made so much money on airdrops and this new FRAX points type stuff. It's just next level. They are just moving and shaking on all of this stuff. So let's take a look at FRAX. So one of the things that's happened with FRAX recently is that FRAX has come up with as of last year, they had kind of this balancer token called FRAX shares that was helping to balance out their stablecoin. And while it was working, never came unpegged, it was a genius thought. They said that because of the downfall of Terra Luna, they didn't want to have this token have something that would scare people off. And so now what they've done, they used to have it backed, a portion of it was backed by USDC and another portion with FRAX. Now what they've done is they've taken all of their profits over the last year and some months and they put it directly to create 100% collateral ratio with USDC and FRAX. So it was one of the things though that gave FRAX shares its value. But now what they've done is they've come up with a really cool profit sharing thing where they're actually sharing with the FRAX stakers. Now this is cool because before, when they were taking all of the profit to fulfill that collateral ratio all the way up to 100%, the APR was absolute garbage. Okay, they were paying out like less than 1%, and it kind of sucked for me because I ended up staking my FRAX for more than 4 years. I think that was the max that you could do it. But now it's popping. It's back up to the good old days. It's at 14.82%. And with this staking of the FRAX, you get all sorts of really, really cool incentives over here in some of their liquidity pools that have a gauge, but you have the ability to, the more you stake, the more APR you get. So there is like a really, really nice use case among many other things that FRAX is working to give FRAX shares more and more value. So this one right now, if you can take a look here, so this one right now is actually way down. All right. And had we have used momentum trading on this, and I hadn't figured it out just quite yet up until a few weeks ago, but you can see here, if I would have been right on this, I could have leverage traded this to the short side and made, let's say if I would have done 3x or 4x, anywhere between 150 to 200%. But I'm here to tell you that I think this one is about to shift and about to make a big move. Now, where am I looking to enter here? I'll tell you guys right now, okay? This is something I only usually reserve for my paid group, but we're only 13.15% away from this thing shifting. And when I think that this thing hits, I think that we're looking at a massive spike, maybe even up to $100, because FRAX has not pumped because of that collateral ratio. Now, imagine if you've got a leverage trade at 4 times this, 4 times 2,000, that's an 80x return. You are going to be very, very wealthy. Now, there are risks associated with this, and this is what I teach my students. So don't think that just because I'm telling you to leverage trade this, that this is financial advice. I don't even give my students financial advice. I just show them what I'm doing. But this is something that I really believe could head up to $100, no lie, okay? But you want to time that entry point really, really well. And I'm going to be putting a substantial amount into this because I actually believe, and I use FRAX Finance's stuff. I use their protocol. I use their borrowing and lending stuff. I actually buy their staked FRAX. That's where my Ethereum holdings are right now. So I really think these guys are next level, and they are not slowing down. They're so far ahead of Maker. They're so far ahead of Rocket Pool. They're so far ahead of Lido. These guys are so far ahead in every aspect, but it just hasn't caught up, and people just were bored with the price because they weren't making any yield off of FRAX, but now that's all changing. Anyways, I'm going to cover in my next video Blocksquare. And Blocksquare is another real world asset, but I wanted to reserve this one just for FRAX. Here's the video for Blocksquare. You want to jump in on that because Blocksquare is a way more down on the totem pole, but it's got a tremendous room for growth that I'm going to be sharing with you on this next video. So click over there and let's get you educated on all this stuff. Cheers.